Hello everyone, welcome back to the channel. This is Fair Value Finder, and today Delta had their earnings. So we're going to take a look at that and see what has changed with the stock, if anything. We last looked at this stock on 6/20/2023, so not quite a month ago. A couple of weeks back, I had given it a hold rating because I saw that it was undervalued, and I said that I expect it to continue on its run up to the buy zone, but it didn't meet some of the criteria that we look for on stocks. Here's a clip of what I said.
The share count, they had issued more shares back in 2022. They were holding it stable throughout the pandemic. So hopefully they'll start to drop the share count and not continue to issue shares. If they continue to issue, it will be a definitive no for me. But the fact that there's a negative tangible book value on the company, it's already a no for me personally buying it. Although I think there's some upside here, I'm going to have to give it a hold.
So we'll see if they continued to issue shares, if that tangible book value is flipped. Those were the main things that were holding me out of the stock. So we can get right into the numbers, a little refresher on what we were looking at last time, and I now have year to date and the percentage to goal columns added to this. So we can see I have not changed these numbers at all. And our fair value is still around that $49 mark. But the share price has moved from that $42.79 to $47.78. So we can update that. That's not going to change much, but the PE ratio and how far the current stock price is from the fair value. But then we also have earnings per share update. We're going to look at this as we get into earnings, but Delta themselves have risen their outlook. Analysts had them at $5.69, but Delta says we can do somewhere between $6 and $7. So we're going to go with the midpoint in that and say $6.50. We do want to remember 49 was the fair value down here. So changing that to $6.50 brings that up to 58 just about. Free cash flow, we had used the trend. They've had a few years of really low free cash flow, 2 years of negative, 1 year early on at 7.4%, but they say that they're going to come in at $3 billion this year. So we can take this and change this to $3 billion and see, and we see that that changes the value even more, bringing it up to 112. So with those adjustments, that fair value has tripled. They actually have not issued any new shares in the last quarter. They have issued 1 million shares so far this year. In the first quarter, that was reflected on their earnings. Their assets are up in the last quarter, not too significantly, but they are up. But their liabilities, their current liabilities were up 65 million. Non-current liabilities down 1.5 billion. So we see a nice trend in that. They're just north of the goal. The goal is to knock off another 3% in liabilities and gain 2% in assets to continue with the trend that we had seen previously. Anything highlighted in yellow means that they're close. They are just shy of 50% to the expected revenue for the year, which is very good because they expect to have another record quarter next quarter. This was a record quarter for them, but also later in the year, that November-December timeframe is the vacation timeframe when there's a lot of traveling. So they should see a nice little spike in that time. Expenses, they're trying to cut their expenses. Right now, it's down a little bit, the expenses as a portion of revenue from what they had last year, but the trend of 5% year-over-year growth would put them at 49.5, which would be 81.5%. So they'll probably outpace that if the revenue grows at the expected levels, because it is the cost of goods and operations and everything else will go up with the revenues. And the earnings per share, They had a negative first quarter, negative 57 cents. They came in at $2.84 this quarter. So we can just flip through the graphs really quick, and then we can get into these earnings. So we see basically a 2020 reset in the revenue, and it's looking good from there. I don't really like this chart here. Gross profit, net profit, EBIT, it's kind of all over the place. We'd like to see the 2020 number at least the size of the 2019, and we'll see how things work out this year. For the balance sheet, we have very slow growth in the assets, but it is apparent. As for the tangible assets, those are negative. So a lot of that money can't really be realized. Interesting. Liabilities, they saw a big spike in 2020, and they've been on the decline since. So they did need to take out some debt to continue operation, survive the pandemic. And we see that the tangible book value is negative across the board again, which was one of my biggest issues. It is on a trend to go positive here in the near future, but we'll see if that actually happens. Cash flows, there's a lot of negative here, so definitely not good sign. Dividends, they of course cut the dividend in 2021, and they're building it back up now. And then the actual price chart, everything seems to be pretty tight as of 2022 and 2023. Things are very tight, led by earnings and trailed by the actual share price. So it definitely shows the 2022 and 2023 values. The stock is undervalued. The cash flows are really dragging it down for next year. So hopefully they can hit that $3 billion this year and then come in on trend next year as well. But let's get into these actual earnings. Take a look at what they're talking about. And I already updated most of the numbers that are important in that sheet that we just looked at. So we can be pretty quick with this. Don't have to read too deeply into it. If you are a owner of the stock, I do suggest you at least glance at this, do a quick read through, because it is important information to you as a shareholder. So record quarter, they came through with strong cash flows that enabled debt reduction, and next quarter they're expecting mid-teen margins and earnings per share between $2.20 and $2.50. They are raising their full year outlook to $6 to $7. Like I said, I took 6.5 as the midpoint there, and that's what we're operating off of. The free cash flow of $3 billion, just like we had looked at, that would really help the stock. So this was in the 40s before we updated the numbers to the newest earnings. And so now we're looking at off this year's numbers, if they really can come in with that and have a record year, $95 would be the new margin of safety buy price for the stock, which it's not insanely unheard of. It was 121 back in 2019 before everything took a nosedive, negative $216 in 2020. And they've been climbing back since then, which is a trend we like to see. 2020 kind of reset the company. But getting back to those earnings, they said that consumer demand was very robust. They came in with $15.6 billion in revenue, EPS of $2.84, and paid down $1.8 billion of debt. Their full year guidance right here, they expect revenue growth of 17 to 20%. So actually, I did not update that on our sheet. We can go and take a look at what that would look like, because we were just using an analyst number. 17 to 20 means that we would probably want to be 18.5% growth would be a decent consideration. So times that actually brought down the revenue expectations shy of 60, just barely. But it was such a small difference that this percent of gold didn't even change. So nothing to worry about there. Operating margin, they want something greater than 12% for their operating margin, which would be impressive for this company considering that they've had a high of 10.1. So I put in here that they wanted a 12%, and that would give them a net profit of just about 7.2 billion. So far, they've come in with 2.1 billion. So their net profit already on the year is 7.5%. So they've got a ways to go to hit that. And then their earnings per share, they are expecting that $6 to $7. Record international performance, it was up 61% for record profitability. That's incredible. Domestic performance was good too, up 8% for both revenue and capacity. So they're seeing more people flying. They are really building out loyalty programs, and people just keep coming back to them. Building that brand name is what's going to be really important and help them stand out in all of the airline companies, because there are quite a few of them. But premium revenue growth continued to outpace the main cabin growth, increasing 25% year over year. Loyalty revenue improved 20%, driven by strong co-brand acquisitions and spend growth. They expect non-fuel costs for next quarter to decline 1 to 3%, consistent with their outlook of low single-digit declines through the second half of the year in their expenses. So their operating expense was 13.1 billion, adjusted down to 12.1. Non-fuel costs were 9 of that. So fuel was almost a third. Adjusted fuel expenses of 25 was down 22.5, was down 24% compared to the same quarter of last year, which is very interesting. And then they talk about all of the debt that they have, what the interest rates are on that. It would be, if this stock were a buy, that would definitely be something to look at, but it still gets the hold designation. So we can continue down and see if we can find the consolidated statement of operations. So total operating revenue was up 13% year over year, which is very nice. Operating expenses were up 6%, and total operating income was up 64%. So their earnings per share was 286 compared to the 115 from the prior year. And here's the share count. That's the same as it was last quarter. Last year was 638. So they have issued some more shares in the last year. Now, if we really wanted to project out the future for this company, we'd want to look at sheets such as this, but again, it's a hold. I just want to give you guys the general overlook of the company. But if you're an owner in the stock, you'd probably want to look at ticket premium products up 25%. What's the margin on that? Is the higher margin portions of the business growing, or are they growing the low margin that is going to end up being a waste of time and dragging the company down? I found this very interesting. Revenue passenger miles up 18%, available seat miles up 17%, passenger mile yield up 2%, revenue per seat mile up 3%. They consumed 16% more fuel, which is very interesting. Here's all of their cash flows. And the important thing is we come down and we have cash and cash equivalents at the start of the period, 3,429, and at the end of the period, 2,824. The assets and liabilities I already updated you on. Shareholders' equity was also included in the spreadsheets, and that's what we're here for. That's what we've seen with the stock. So I'd say the earnings are good news. The stock has sold down a little bit off of those earnings, 0.5%, so nothing crazy. They reached a high today of 49.75, so they did run, and then they faltered throughout the day. So potentially something was said in the actual earnings call, but the numbers, they look good. So we saw that it boosted this year's expectation, or this year's fair value, almost 3x. Returns are still the same. A negative tangible book value is improving. Their liabilities are very close to their assets. So if they can get these that cash flow up, these liabilities down, and that assets up, then soon enough they will be considerable. But when we look at this here, we'd want at least 3 years offset from the last negative. So they wouldn't even be up for consideration until this year. So some point next year, they might be up for consideration. And at the rate that they've been improving their free cash flows, we're probably looking at another 3 to 4 years before they hit the quality company designation. But their ROE does look good. Their revenue growth looks good. What's expected looks good. Expense as a portion of revenue does seem to be improving, but is very high. Earnings per share looks very good. They just need to focus on those expenses and the cash flows, and that's what it looks like they're doing. So, I'd be leaning more towards it being a buy after looking at all this, but it's still going to stay a hold because it doesn't hit all the criteria. Thank you guys for watching. Hopefully you enjoyed the video. If you learned anything, please comment down below if you disagreed with anything. If there's another stock you want me to take a look at, some earnings coming up. I always love to look through the earnings to see what's going on. And subscribe so you can stay up to date with all this stuff. Go back and look at the last Delta Airlines video that I did so you can get an understanding of how the company's trending. And I'll catch you guys next time.